Mark wanted us to look at Chrysalis, listed on the FTSE in London and a fairly newly listed share, only listed on the exchange last year, December. But you can see here, Mark, that there's a clear head and shoulder formation visible, with a left shoulder, massive head, and the right shoulder, and even lower highs. Every time the share spiked, the high was a little bit lower than the previous high, and that implies loss of momentum. It tells you that the sellers are taking profit every time the instrument rises, and that is seen as negative. The warning of the head and shoulder formation will be confirmed when that neckline changes into a resistance, and that is waiting at around 195. And if that level changes into a resistance, the full target of the head and shoulder formation will be the length of the head projected downwards from the neckline where the formation will be confirmed, which means it can take it back to 168, which is even lower than where the share listed at around 173. So be careful with that head and shoulder formation. When can you take a sigh of relief and assume that the warning of the head and shoulder will be off the table? When this left shoulder, and I'm using that one because that's the highest one of the two, and that is waiting there on a line graph of 207. Above that level, we can assume that the warning of the head and shoulder formation is obsolete and will be off the table. Sharon wanted us to look at Telis. Many of the retailers in the US obviously treated investors extremely well, and now it's a matter of where can I take profit. Now at the moment, Sharon, there is a possible, next lower high on Telis will be confirmed below $11.23. Above $12.27, we can assume that the momentum to the top can continue, and the strong resistance that needs to overcome is waiting at $13.06. Above that level, we can assume that the share can make a new record high. But have a look at the pattern on Telis. You can see, it's clear roller coaster rides, and every time it continues to make higher lows. So the next lower high is a critical level, and as I said, that is waiting at $11.23. Below that level, an inverse cup and handle formation will also be confirmed, which can take Telis back to that previous strong support waiting at $10.32 and even $9.80. Yes, we are trading above that red line, the 40-week moving average, and that is waiting at $8.66. So only below that level will we assume that the long-term sentiment towards Telis changes to negative. If we go back to the history, we can see that this level, if I extend it, is the highest it's been since about here back in December 2018. So that will be a critical resistance that needs to be overcome. Yes, my stochastic is sitting on a 73, almost overbought. My blue line is still pointing upwards, so keep an eye on it. As soon as it looks like it wants to break downwards through the orange line again, the negative divergence on Telis will be confirmed. Jerome wanted us to look at Apple, one of the favorites in the market. And Jerome, what is so interesting for me about this graph is the fact that this trend line that has kept the momentum to the top in place since July last year is waiting so closely to my 40-week moving average, and that is waiting at $121.69. Below that level, the trend line since July 2020 will change into a resistance, which will be a warning, which means that trend since then will have changed or possibly change around. And my long-term sentiment towards Apple will change to negative. My 40-week moving average is waiting at $121.69. A possible distorted cup and handle is also visible. But once Apple starts to change $134.16 on a line graph into a support, and especially that high at $139.07 into a support, can we assume then that the share can reach for a brand new record high and that the momentum to the top can continue? If we go back, we can see what a massive rally the share has given for investors in the last couple of years. So keep a strong eye on that 40-week moving average. My stochastic is sitting on a 62, no man's land. So let's hope it stretches a little bit to a side so it's easier to make a decision whether to get in for more or rather to consider taking profit. Ramon wanted us to look at Uber, also another favorite in our market. But Ramon, If you've got a trained eye and you know technical analysis by now, you'll see that clearly this level around $60.63 is a strong resistance. Uber has to get above 60.63 to assume that it can reach for new record highs and that the momentum to the top can escalate. My first level that will be a warning on Uber will be below $54.71, and that will also confirm a possible double top formation. Obviously also the next lower high, and that will be seen as a negative. So below 54.71, the first bells will ring as a warning. The second one below 52.75 if I project the second trend line. And the critical level will be that 40-week moving average, waiting at 46.64. It's interesting to see so many of the shares in the US have found resistance for the last couple of weeks. Either lower highs, head and shoulders, double stop, inverse cup and handle formations, which tells us that the sellers are really considering taking profit. My stochastic is sitting on a 63, no man's land. We can clearly see that blue line is very keen to turn around and break through the orange line. And once that happens, my negative divergence will be confirmed. But as I've said, above 60.63, above that high, we can assume that the momentum on Uber to the top can continue again. Royal Dutch Shell Class A. That was the request from Vernon, and I'm sure you enjoyed the rally we've had with the Brent crude oil, and now it's a matter of probably where can I take profit or where can I buy in for some more. At the moment, the critical trend line that is waiting is sitting at $38.63. Royal Dutch Shell needs to keep that level as support and definitely needs to start to consolidate above $39.38, that strong resistance, in order to think that we can maybe see another relief rally to the top. The next strong resistance that needs to change into a support is waiting there at $40.24, and that recent high at $44.35 needs to change into a support. We know of the windows, and I quickly want to have a look at them to just see how many of them have closed. Yes, we can see this gap has been closed with these candles here, but we still have this window waiting at $48.76, the window waiting at $56.78, and the window in that week of the 13th of Jan waiting at $58.45. Beautiful windows at the top that one can aim for, Vernon, but also note there's a window at the bottom, where that means Royal Dutch Shell can easily come and first close this window. The first one is waiting there at $32.07, and the next one $27.30. Remember, windows always get closed. Can take days, weeks, months, or decades. But as long as a window at the bottom remains open, we can assume that the momentum to the top is in place and that the bulls are stronger. But once the sellers become stronger, there is the probability that, yes, they will definitely go for the window and to aim that as a target to go and close that window. So it will be very interesting to see who is the strongest party here. And that 40-week moving average, I feel, is a critical level that needs to remain in a support in order to believe that the momentum can continue. Otherwise, the possibility to come and close these windows will be on the table. It's clearly how you can see between line graphs and candle graphs, how sometimes it makes it easier to make a decision, takes the noise out, or it gives you a little bit of a different perspective. Roger wanted us to look at GoPro. Listed on the NASDAQ, had a massive rally, beautiful cup and handle that confirmed. Next higher lows were confirmed, and now again, lower highs were confirmed when that strong support that waited at $11.88 changed into a resistance. My stochastic is still overbought. My K line has broken downwards, which means that our negative divergence has been confirmed. And now it's a matter of, can GoPro go back to $13.08? Can it change it into a support? And more importantly, can it change $13.54, that high of that closing price in the high of the week of the 15th of March? Can it start to consolidate above that level? We can see it looks like the share wants to turn around here. So that critical resistance that needs to change into a support is waiting at $11.88. Lower highs has been confirmed, which implies that the sellers are keen to take profit and that they have already started to do so. Maybe you should consider doing the same, Roger. It is heavily overbought with the divergence. Otherwise, use those levels of above 1308 again to chase the momentum should you want to. If you go back on GoPro, you can see for such a long time the share just waited and consolidated on a base, and hopefully at some time with new innovation they can become one of the winners again. Mitch wanted us to look at Seneca Foods. Seneca Foods listed on the Nasdaq in the US, and again, lower highs. Inverse cup and handle formation on Seneca, and that will be confirmed when the strong support waiting at $47.67 changes into a resistance. Only above $50.48, and that's above this resistance, will I assume that the momentum to the top can continue. And we can see that clearly high waiting at $60.06 needs to change into a support in order to believe the momentum to the top can continue. Which makes it difficult is I'm sitting here with a stochastic at a 52 in no man's land. But have a look, my blue line has turned around above my orange line. So that tells me there are keen buyers here, that they are, and that the price might soon follow my stochastic indicator. My 40-week moving average is waiting at 43.48. So let's see what Seneca Foods does. Only above $50.48 will I feel a little bit more comfortable about this graph, but below 47.67, inverse cup and handle will be confirmed, and we can expect lower levels of support waiting at 43.84, 40.16, and that strong support waiting at $36.41. Don't forget to send through your requests for next week's show. Have a fantastic week. Take care.